right now, and our research team will speak about all of those. But the HDFC, IDFC and Shriram, IDFC and Capital First, as well as a clutch of results that have come out too. All of these would be in focus. Let's talk about all of those with Siddharth Sedani, Vice President Equity Advisory at Anand Rathi, joins us on the show. Siddharth, good having you. Thanks so much for joining in. We were just talking about HDFC, so maybe let's start off with that. While this is on expected lines, the fundraise, does this in any way change your advice to your clients, people either who are holding HDFC or want to buy HDFC afresh? Does this fundraise provide that opportunity?
Good morning, Neeraj. Well, somebody who is holding HDFC should keep holding the stock because fundamentally stock sounds good. Overall financials are stacked up very well. Fundraising can be one of the attraction going forward. But overall perspective, fresh buying in this stock, we would not recommend. Either we don't cover. Still, we believe that in the same space, we believe Indiabull Housing Finance looks the most attractive. If you want to take a fresh position in this space, I think Indiabull Housing Finance can be a good proposition to invest with a target of 1500.
Okay. Do you cover either Capital First or IDFC Twins? And what are your thoughts post this exercise?
Well, we don't cover either of them, but this exercise has been really good. I think Capital First will be gaining a lot of ground out of this. It is one of the NBFC which is really growing in a strong pace since many quarters now. We believe Capital First will get a better wing. IDFC Bank, as if there was not much of operational efficiency which was coming in, the advances was also not that great. They were struggling. So I think Capital First will be on a positive side, but one has to always check for next 2 quarters at how the synergies work, because if it doesn't work, then that can be really harmful for the stock, I think. But still, I believe that this is more positive for Capital First than the other company.
So that I'm a bit curious. I mean, not tracking a stock must be based on some kind of logic. If you could tell me why Capital First was not under coverage. IDFC Bank, I can understand. It never made money in last so many quarters.
Well, we were more positive towards Bajaj Finserv and Bajaj Finance, and we believed that leader will be moving more better pace than any other company. Of course, Capital First was having the same kind of a model, but in a smaller size. So we were more confident over the leader like Bajaj Finance rather than Capital First.
That equation changed now because you have got a bank.
Of course, but still I would say, Pradeep, that the synergies, how this works, would be very important. As I communicated the last, I would say this is a strong point, but synergies should be looked at.
Okay, so jury is still out on this probably, and we'll wait and see how things really pan out. But our research team is ready with all the bunch of stocks that you should be focusing on. Some of those we did speak about, but let's start.
There is a technical reason to maybe buy Mindtree today if the Bloomberg terminal is to be believed. But fundamentally, is there merit in buying into a Mindtree afresh?
Yes, absolutely, because we are very positive on mid-cap IT space, and in specific Mindtree, we believe that overall operational efficiencies are improving, services business are been improving, can expect around a growth of around 18 to 20% going forward. Mindtree fundamentally looks very attractive. Apart from that, also there are some companies which we really like, likes of Tata Elxsi and the Persistent System. But as per the technical indicators of yours, I think Mindtree fundamentally also looks very interesting for positive going forward.
Okay. Siddharth, what's your view on Syntex Industries and Syntex Plastics? Both the numbers have kind of disappointed the investors, and there are several investors who have been holding on to this, hoping to gain by a value unlocking post demerger, so they are still waiting.
Absolutely, the numbers has been disappointing. Margins have eroded big time, and there is less possibility of next improvement, big improvement seen in next quarter also, that is March quarter. Somebody who is holding it, I think one should wait out for one more quarter and look at how the results are panning out. If there is some kind of improvement, you may see some kind of a stock price appreciation from here on. I think better is to wait out for a quarter, the people who are holding. And fresh buying, I would recommend absolutely and avoid. Don't go for fresh buying. If you want to still play out plastics, or you want to play out this kind of a business, go with consumption kind of a business. Companies like Nilkamal, I think as we know that thrust on consumption would be pretty higher. From non-organized to organized is one of the thrust which is coming on for the company. Nilkamal can be a good proposition for investments with a target of 2300.
Okay. I'll ask Siddharth. Advise a fresh investment, Siddharth. Where would it be? Sector agnostic. I'm not pinning you down to a sector, but if I had to ask you for one mid-cap idea.
Well, that would be from the defense space, that is Cochin Shipyard. It's one of the biggest in terms of shipbuilding and ship repair. Defense has been a big opportunity for this company going forward. The order book currently is around 8,900 crore, around 9,000 crore, which is quite considerably good for a good revenue to flow in for next 1 or 2 years. We can expect that Make in India initiative can augur well for the company, and this company can be the leader in shipbuilding for a global shipbuilding industry. Overall perspective, it has a large dry dock, and we expect this company to really perform very well and get a lot of orders from defense space. Budget can be one of the factor which this company would be benefited from. Cochin Shipyard one can look at with a target of 695.
Okay, so that's the call. That's the stock pick coming in from Siddharth.
Hey, the